Well, welcome to our lender meeting today by IT Savings. Thanks so much for coming in, Susan. We're excited to, learn about your product and she's brought some awesome packages for some of you here that were able to come in person, and I'm sure we'll get some information online.
Oh, absolutely, I'll
Yeah.
send it to you.
Okay, perfect. So then I'll share that information with everybody on
Sure.
the Zoom call.
Nice meeting.
And yeah, well, I'll hand it over to you, so whenever you're ready, and thanks so
Okay.
much for being here.
Thank you. Okay, great. For those who don't know me, my name's Susan Zanchetta. I've been with IC Savings for 12 years. I'm your senior mortgage underwriter and business development person, and I've been in the industry probably 30 years plus. So we won't go for there, but this is what you're dealing with. So yes, you do have lots of experience, okay? We're a B lender, okay? So the bottom line is, how I like to say it is, if your deal doesn't fit an A lender, that's when you need to reach out to me, okay? Because with you being new into the business, ideally, okay, you want to have at least 3 or 4 A lenders, you want at least 3 good B lenders, and then you're gonna have your private, okay? And I do say that because nobody should have all their eggs in one basket, okay? And if you do that, you should constantly have a flow of business coming in at some point or another. I also do my own files from beginning to end. And I'm one of the few underwriters that do, but it's because of my experience and I do a dual role as well. I think it's very important to meet people. Okay, that's crucial to me because it shows me who I'm dealing with. So this way, if we might need exceptions or we might have a bit of a deal that needs a bit of massaging, it gives me that comfort level because I know who I'm dealing with, right? And I also think it's the way you build relationships and you build your business, okay? So because you're fairly new, okay, I'm gonna take you through some of the basics, okay? Stop me anytime if you have questions, okay? What I want you to remember is that we are a common sense lender. And we've come up with some new products that I actually am gonna have to more or less go over with you because we've only launched it last week, so I don't even know that for a fact, but it's good. So bottom line, what we're very good at is when we call it e-business, we're dealing with stated income, cruise credit as a rule. Those are our niches. And of course, right now, because of the lenders qualifying at the stress rate, we're not doing it. We're doing it at the contract rate. So even though some people, they could be on the very borderline with the A lenders, but they're not fitting. So I'm even starting to see some of that business as well. Okay, so as a rule, let's just start with stated income. We want basically generally 65%. Sometimes we'll go to 75%, depending on the strength of the deal. Okay, the lower the loan to value is, the easier, of course, everything is when it comes to documents, if we need to massage a few things of that nature. Okay. Purchases, as a rule, 80%, 3/5, 65 to 70. If we're dealing with condos, okay, right now, if it's a purchase and it's in Toronto and it's on the subway line, we'll look at 75%. Outside of that, we're looking at 65%. You want to have a minimum square footage of 600 plus on condos. Okay, if you have something like, for example, it might be 590, then I would say definitely give me a shout as well. Okay, if you're not sure on a deal, my email and my phone is always open. So if you need to have a quick chat or you're not sure about a situation, just send me a quick email. The 4 number questions I will usually ask you is basically, is it a purchase? Is it a refi? Where's the property located? What loan to value are you looking at? Credit scores, and are we dealing with stated or verifiable income? So for example, I'll lend in Ottawa, but I'm not going to lend in Sudbury. We lend strictly in Ontario. Okay, you get out into well and septic, 65%. So if you have a rural property, easiest way is send me the address, just email it to me. I'll do a quick check and see if it's something where we would go. Now, I mean, you're Bowmanville, Clarington, Barrie, Orangeville, like all over the place in the sense when it comes to the rural and the well and septic. But if you're getting out into, let's say, Prince Edward County, It'll depend on the covenant strength, clear questions, yes.
So I'm in, up near Midland area.
Okay.
That's all.
Yeah,
still pretty
Midland,
good?
Barry's
I-
good, yeah, we won't do, Friday Harbor, just so you know.
Oh, okay.
Okay, we don't do those condos, right? But yeah, absolutely. Now with you, like the Barry area, never an issue, right? You get into sort of a little bit of the outskirts, I still do them, but you might want to send me the address on that, okay? What I also say is when you submit the deal, whether you're on Biologics or Velocity, when you put your notes in there, you can't get rid of them. Okay, so, and a lot of times you might hurt the deal because you've got notes in there that maybe you shouldn't have in there. Now, I'm not your normal underwriter per se, because if you go to, doesn't matter what company, a lot of underwriters sadly will look at a ratio or they've heard a conversation and they're gonna just say, nope, doesn't work, that's it, they won't re-entertain anything. I'm the opposite, right? I want you to know your client as well as you can. Tell me what you're dealing with. Now, for example, credit. Credit scores, I mean, the only way it affects it would be the rate per se, but I've done scores within like 400s too, right? So what I want you to do is you need to get the story, like what happened to their credit. It can be divorce, it can be illness, it could be, you know, they lost their job, or they could have just been a fool and have sloppy credit, and it's okay. Like just as long as I know that, right? So that part's important. I've done refinances to pay out CRA, credit proposals, now depending on the reason. We will look at, you know, discharge bankrupt, only one, not two of them, right? That'll kill it on the spot. And again, looking for explanations regarding that. We also look at contributory income, like there's a lot of ways to make deals work, and a lot of people don't really realize that we're conventional. We are not insured lenders whatsoever. Okay, 30-year ad, and we qualify at contract rate. Okay. You got a question?
Yeah, just a question about that. Is that something you're able to do? Like we don't have.
Oh, no, absolutely. So you've got the interest rates,
Yeah.
you've got a copy of them. So if it's the 1-year term, you qualify at 694. Whereas if you know you're going into, say, Scotia, they're gonna have 2 beats to that. Okay, so yeah, so that really definitely helps, right? When it comes to stated income, generally on your application, you know how sometimes it's an Ontario numbered company, that's fine. But then in your notes or a separate email, which I'm great with, tell me what the heck these people doing, because to give me an Ontario company, that's not gonna help me any. I need to know their source of business, okay, what it is. And generally, all I ask for is business license or articles, depending on the deal, 6 to 12 months bank statements, and I give you a self-declared letter. So when you, how it starts is that, let's say you send a deal in to me, all you have to do is the first time is put it to my attention, it'll hit my queue, then you're recorded as me being your underwriter per se. Once I approve that deal, and rarely do I ask for documents up front. If I need them, I will, but usually I just condition it and send them to me afterwards, right? But I will send you, your commitment, if you need the self-declared or the appraisers or the down payment, whatever it is, you'll have everything attached to it. Now, on purchases, we allow people to use their own lawyer. Refinances, 98% of the time we do. The only time we may choose the lawyer is if somebody's transferring title or there's a reason for it that we need the comfort of our lawyer as well, and they'll act for the client plus us. Okay. Rental properties, we will take a look at. We add an extra 25 beats to the rate. Generally, they're around the 65%. Now, sometimes we can up it. If, let's just say you had a rental, they wanted 75, and let's say it was a high-rise condo. Max I can do is 65, but they have equity in their residence. I will look at taking their property as additional collateral in order to raise the LTV on the other. So a lot of times you may not see this when you're doing the deal, but see, that's where my expertise comes into play, because I look at how to make the deal work, not how to kill it, right? Because I look at it as a win-win. Bottom line, you know, you want the client wants the deal, we want the business, everything's done, and it stays quite nicely. Okay. contributory income, for example, let's say the ratios are a little bit tight and kids are buying a house and let's just say, mom or could be both the parents maybe moving in and contributing income to them. So let's say you need an extra $500 per se, right? Then the parents don't have to go on title. I would just use that, say $500, and I'd give you a contributory letter for them to complete, okay? So there's so many different ways of looking at this, and the same thing with rentals, right? With the income. Now, as a rule, like you'll see, our notes will vary. What I like to see is use either 75% offset or you add to the income. Now, if your ratios are close, so for example, if we've got verifiable income, you've got a GDS and a TDS at 50-50, and if it's stated, you're at 45-45, okay? Now, let's say we've got a rental property and it's verifiable income, but you're hitting maybe 54% TDS, GDS. Don't worry about it. If you're within reason, I can work at different ways at my end in order to get those ratios down. I mean, if you're gonna be like if it was like 80%, I doubt there's gonna be much I can make with that type of thing, right? But it happens, right? So we have a lot of different things like that. Now, for example, this will give you, and this is what's important, why I like to meet people. I have this client and she's doing a refi, it's through a broker, and it's mom and daughter, and they've been living together like forever per se, they're long-time clients. Well, I need $1,600 in contributory income. That's a lot, like that's not realistic for contributory income, like it doesn't make sense, right? But I know the broker and send me the client, and so I asked the broker, well, can you give me a lease instead? Because it makes the file better. Bottom line, right? And broker went back, said, oh yeah, I'll sign a lease, no problem. So you see, it's one way of getting around things. It's also, for example, appraisals, right? You can have appraisals come in, and of course, everybody thinks their house is beautiful, but you get some of them where it comes in and it's like, ooh, what happened here? They might need a roof or windows or their floor, like where it's like, they're not really good, right? But instead of killing the deal, if there's equity there, I will come back to you and say, well, listen, these people get a couple quotes and they need their roof done or their windows done, then maybe we can increase it a bit, still do the deal. Right? And sometimes I'll hold back funds, sometimes I won't. It just depends on the situation. So again, you have to look at the whole picture, right? And this is why common sense lending is the best, right? So that, yeah.
In that situation, would you pay the contractors direct or would you just top up their?
What we would do is, let's just say hypothetically, we ask for 100, they need 120,000 now because they're going to do the upgrades. Depending what it is, maybe I'll hold back 5,000, go and get your work done, and then, they can pay them.
Just do a schedule.
Exactly, they can do their own thing, right? If I do a hold back, and instead of sending appraisers out, like I try to keep costs down, it's like, get copies, the contractor signed it, the work, send me some photos that the work was done, and if I'm satisfied with that, then I just release the holdback. Okay? Yeah, so there's so many different ways, and especially with this type of lending, right? We're not the norm. Oh, there's no farms, no hobby barns, no chickens and cows on properties, okay? We don't like any of that. So more or less, like that's your alt-A, we've got your stated income. Like I say, it's about knowing your client, and the biggest thing to us is we have to mitigate that income, right? So it's gotta make sense to us, and we wanna be able to ground the person basically, okay? The rentals there. We do have an interest only mortgage. I've done some, it doesn't say, it's for certain people. I know I had a deal, I don't know, last year sometime, and the broker had called me on and says, I don't think I can make this deal work because the ratios were out of line, but it still sounded like a good deal. So I said, well, why not send it in to me? I'll take a look at it. And I reworked it, switched it into a different product, qualified the deal, sent it back to the broker. And I said, it wasn't what you're asking for, but I've got you a deal still, right? And he had no idea of looking at that one. His client loved the fact it got done. And again, everybody was happy on it. But again, that comes down to, I've got different experience than most type of thing, right? Now, this one is good. This is, I have to get that. This is your payment fullback mortgage. This is one of, we just launched this last week, and this is strictly for stated income. Now, how this one's gonna work is, let's say you've got somebody, they must be self-employed for a minimum of 2 years, regardless on all of this, but for this one in 2 years, and all we're gonna ask for is a copy of their business license, and I'll give you a self-declared letter. They don't have to use bank statements, but what we're going to do is we're gonna take a year's payments. We'll deduct it off the advance, okay? We're gonna put it into a savings account. These people will continue to make their mortgage payment. So let's just pretend hypothetically the payments are like $1,000, okay? We're gonna hold back 12,000, stick that into an account. Throughout the year, they'll make their mortgage payments, right? And this is how we're gonna mitigate stated income from bank statements. Because even though we've got their lump sum here, they're making their payments. So obviously that's our way of mitigating the income. At the end of the year, they're gonna give that money back to the client. As long as they've been good, they get a renewal agreement into a fixed term. And now they're on the book showing stated income.
And how's the lender insured in this scenario if they are not able to make a payment?
If they don't, then we're gonna take one of those payments out that we've been holding on to.
Yeah.
To keep that account up to date. Now, if we ended up taking 3 or 4 throughout the year, they may not get a renewal agreement. Because then that's how we're gonna show them. Okay,
It is working for the commission based too, like real estate or,
commission, I think so, yeah.
you know,
Yeah, I would with realtors. I don't see why we wouldn't do that product.
And what kind of interest rate do you typically run on that
So it's
product?
still gonna be our posted rate, so based on like your beeping, and we'll add a quarter point, and it's only for a 1-year term. Okay, so this one, I can see us doing,
it's a 1-year term, but they have the linear option too, or.
yeah, so what happens at the end of the year, as long as they've made their payments,
Right.
right, they will be offered a renewal agreement. And then they can just carry on into a fixed year term. So it'll be really good for those who can't, or have like maybe some business bank statements, but they're not really showing anything.
Right.
So we're not gonna ask for those, right? But that's what I mean, that's why I say you need to know your client. So this way, when we talk, you can say, they're not gonna show anything, right? Because that's how I have to mitigate the income. But with this, I think this one may do well this year with a lot of people, you know, with the rates. And they don't know where they're going and all that type of thing. So we'll do both either a purchase or a refi. So the max will be 75% on a purchase. But remember, if we're holding back 20,000, that's coming off, right? So that value must stay at 75%. Okay? So I think that one will do very well. All our fees are generally 1%, and it's a split fee, so it's 50-50. So 50 for IC savings and 50 for you, okay? What I want you to also be aware of is, especially because you're starting, you've got your database, right? And I'm sure you all keep a record of when your mortgages are coming up for renewal. So with us, there is a broker consent form in here as well. If you have your clients sign up and you send me an email 90 days prior to the renewal, requesting those papers, I will get those for you. You re-sign up the client, you're gonna get paid full weeks. If it's a 1-year term, generally it's a flat fee of $250, but if it went into a 2, 3, or 4, you're gonna get paid on that. So it's a great thing to have if your client's not going anywhere, and you're just gonna re-sign them. Because ideally, you know, you come across ones with loose credit, you're hoping they're gonna get back on their feet and you're gonna move to the community lender. We don't expect to hang on to our deals per se. But if you have the people who've stated income who are not gonna show the proper papers to your A lenders, they may just continue renewing or increasing or whatever. Now, another part to be aware of, we do have a bona fide sale clause in our commitments, okay, which means they can't get out unless they sell the property during that term. However, this being said, if they say it's got a 2-year term and they want to look at refinancing, we would still look at that. You know, we do a blended rate for that. I have somebody, for example, they have a year remaining on their term, they've got approved at an A lender. well, you know what, it's a good broker of mine too. So it's like, yeah, give you a commitment, we got a name vendor, and I'll go for an exception. And he got an exception, I mean, they still have to pay the penalty, of course, but we're gonna let them out of the mortgage. So even though it's there, it's not always set in gold. There's exceptions pretty much to everything. Okay? So the next one we have, which I think is really good, is the next one's a reset one. This is another new one we came out with. So this one, again, it can be for purchase or refi. This one is a maximum to 65%. They can have a 1, 2, or 3 year term. And on this one, there's no mortgage payments at all. So what we're gonna do is accrue the interest and it goes on top of it, similar to a chip mortgage, okay? But there's no really age involved or really a loan to value, which I believe the chip mortgage is registered at. So this could be handy for somebody, for example, if you've got seniors, they're gonna retire, they, wanna hang on to some of their money, they're gonna downsize, could be somebody like that. It's somebody who has illness, or they want to go back to school, or somebody who maybe cannot just make their payments. So there's a lot of different things that this could possibly help. The only thing with this, of course, the mortgage isn't going down, it's going up because of the interest being added to. Okay. And with this one, yeah, like I said, you can have a 1 to 3 year term. Yeah, and same thing, it's 1% split fee, but that could come in handy depending where people are at, right? And like I say, it's brand new, so it's just coming out with this product, so it'll be interesting to see where it takes on to. Okay. Yeah. I think that's good. And then, of course, we have another one where, they wanted to buy down the interest rate, they can buy down the rate, and we would follow. So let's just say the rate is 6%, they wanted to buy it down by 2%. You're gonna now be calling people at the 4%. So it's another way of looking at it, but we've also got it where rates are somewhat coming down too, so people may just hold off. It's hard to say. We're hoping to see another Drake drop, right? So it'll be interesting that way. Okay. Now, as a rule, we don't collect property taxes. Okay, if they're in arrears, I do. And we will hold back 6 months taxes if there are in arrears. Some people ask us to collect their taxes, and they're not arrears at all. But once they tell them, why don't get set up with the city, instead of holding back 6 months, the bulk of the times they go that route. We always require both spouses, okay, whether they're on title or as guarantor. Sometimes we will make an exception depending on the reason. If that's the case, that's fine, but I'll still want to see an application and credit bureau on the spouse. And that's how I've got to go for the exception to mitigate putting her on parole type of thing. Okay, does anybody have any questions in particular?
I have a question about, credit scores when you have 2 people. Is there a typical, standard when you have like one that's higher and one that's lower, how they,
Average.
just an
Yes,
average,
an
and that's typical what happens?
That's what I do.
Yeah. that's-
Yes, absolutely. Right, and then if we ever have, and that's one thing you also don't have to really worry about with me is. Your interest rate, or if we have, like, we had a take 100 promo where I was paying 100 beeps on the deal. We don't have that right now, but when we have this, not only will I let you know, but also you don't just have to worry about it, because if your deal comes into me, I'm gonna get you the best rate. And if we have promos going on that as well, it's just the way I work type of thing. Okay. Right now, pretty much, I still work out of, I'm in the office 1 day a week, but I'm working out of the house for like 40 years now, right, because of COVID. So, but I'm always and I always say there's no such thing as a silly question, because you can do so much these days on how to package deals, right? And it's not, I would say it's not that typical. And even when I go on holidays, if your deals are in, You know when I'm gonna be away, because I'll have to file complete, and usually the order starts right at point two. Okay, so I'm very proactive when it comes to things like that. This and that, there's no headaches, I've never had a deal blow out on me. If I wanna close a deal in 24 hours, I've done it, don't like to do, but I can do it, right? Yeah, and we do have a commercial department, I don't know if any of you will come across commercial, if you do, just let me know and I'll send you the fellow's name. Type thing, I mean, they'll look at the store and apartment fronts, all sorts of stuff, I don't get involved in commercial, because I don't know commercial, it's strictly residential. We'll also look at co-ops, co-ownerships, and we're one of the few lenders that do. We also have a list for that, so if you should come across that, just reach out, let me see if it's on our list. And then we can go from that point. Okay, what type of deals are you guys generally seeing?
I'm fairly new.
Well, yeah, no deals, yeah, I have a deal in the pipeline, but
Yeah.
it's a refi and
Yeah,
a complicated one, so, but that's coming up next year for
okay,
a friend of mine. But
okay, well, no, because these should definitely help you get involved, right? But with you all being pretty new, definitely, I am not joking, make sure you got a few A's, B's, and C's, right? Now, if I have a deal from you and I can't do it for whatever reason, and I know somebody who might be able to, I will tell you, I also some type of thing, because you know, I mean, and I did that for one book, and they said, well, why did you give me that person's name, you know, and I said, well, because they can't do your deal.
Yeah.
They can help you, right? And they,
Yeah.
oh, they were so
But-
shocked that we do this.
but getting
right?
along in the industry, not cutting each other's throats.
Well, see, and that's exactly what it is, you know, I mean, and that's what I say, I mean, I'm not gonna sit here and promise you I can look at it, like, do every deal, but I do look at them, right? And there's some that are very, like, you know, they're your simple, could be deals, no problem, hands down. Then you've got ones that I know I'm gonna decline, because, you know, maybe it's up in Thunder Bay and I'm not going there. Right, and then you've got those middle deals, right, that there is a deal there, now how are you gonna put it together? Right, and there's quite a few like that, right? So it's a matter of how you structure things, right? But see, that's where I'll come back and say, oh, and I'll ask you a question, they have this or that, because I may be thinking of things that you may not have thought of this yet, right? Which the more, of course, you get out there, the more and more you're gonna look and see who's doing what, definitely, right?
A question regarding Filogics, you said those notes cannot be deleted, so while as new agents, if we are putting some information there, we should be double sure of what we are gonna write.
Yeah, make sure you're putting things down, because, for example, if you know, whether it's an A or a different type of B lender, but if you put, okay, let's just say hypothetically, you know, you're putting a note in there, oh, this guy's not gonna show any income. Right, well, that could be a dead kill for another
Yeah.
lender, but if that was in my notes, because we have a new product now, I'd come back and say, oh, did you realize we have something like this, right, so. We have to be careful who you talk to, savage, right, because there's a lot of underwriters out there, if you have a ratio, say your GDS is like 40s, let's say it should be 45 and it's like 48%, a lot of them just throw up their hands like, no. It's dead, instead of like looking at it, because can you decrease it, will the deal still work, like if you really need to, can you bring in contributory income, right? I mean, let's say mom's living in the property with the kids, right, and let's say you submitted it with $400 contributory income, but I need 500, I'm gonna come back to you, right, if I like the deal and everything's good about it, I'm gonna say, is it possible you can get me 500? Right, and you'll either say yes, or I'm not comfortable in talking to it, or maybe the mother doesn't want to do it, she wants to keep it at 400. But you see where there can be some flexibility in it, but whereas if you put, oh, $400 in your note, but I came back to. You know, you're in that area, right?
Yeah.
So usually how I do it is that, you know, if it's to do with bruised income, absolutely, because we need to know that. You want to tell me about their jobs and they're absolutely, they're in arrears with property taxes or CRA, no problem. But when we're talking about income, especially, do it in an email, right? Because tell me what you've got and I can come back to you and say, okay, we might be able to work with that. So when it's the lower LTV, very, like, much easier to do. Absolutely. We love equity in properties, love it, right? If somebody's been a homeowner for 5 years and they've been maintaining their payments all along, yeah, they've got flexibility, absolutely. Now, let's just say somebody bought a house today for 800,000, you know, did 75% and wanted to refi it next year. We might take a look at it, but it's gonna be based on the value they just closed it at. Okay, because that's what we don't want everybody pulling out all their equity like in less than 2 years per se. Right? So there's a lot of different angles. Now in here, somewhere in my notes, they do state that we'll consider mortgages up to 1.5. That's few and far between and has to be a really strong deal to get that down. Because I call it goes to the eye of the town for approval. Usually 1 mil seems to be our max lately, but that would be a deal. Pick up the phone or send me an email and just say like, what do you think? Do you think this one might get put through or not? Because I'm not gonna waste your time if I don't have to. I always do my deals pretty much in order, my queue, to keep things fair between everybody. But if you have a rush deal, then tell me. All you have to do is send me an email and say, you know, it's COF, or sometimes even refis can be sometimes very important.
So is that 1 mil, is that loan value or is
Loan.
that?
Yeah, loan.
So-
What about the client has the restaurant, it's the 75 years old. Then she free and clear house,
Yeah,
right? Then she want a 50% loan to value.
she wants to do an ETO.
Yeah,
For what purpose? Business?
no, she bought the condominium, then she gonna be closing I think May this year.
Okay,
That's why she want to be refinancing her house, then prepare for the pay for that
so how we
what
would,
it-
yeah, so how we would treat that, because equity takeouts, right? We have to be careful of AML, right? So if they're gonna, for example, pull up 400,000 or 500,000 and it's for a purchase, we will look at that, but we're gonna have lawyer direct funds.
Okay,
Okay, anything over 100,000. Depending what the reason is, very difficult, just have, you're not gonna just get a cash ETO out, right? They don't wanna be doing that, but if we're gonna, you know, same thing, like, we're gonna use a down payment for a COD or like a CON or whatever the case is, we will do that and we'll direct funds. If they wanted funds to go into, say, like a GIC, that's something we won't do, we just don't wanna get into all this. Okay, if they want to pull up 40 or 50,000 because, you know, the daughter's getting married or whatever, we don't have an issue with something like that. But when it's a large ETO, we have to look at that. When people have multiple properties, generally, we don't like them going over 3 or 4, and it depends on the strength of the client. Okay, so they could have their residence, let's say 3 rentals or 2 rentals, but we'll look at that as well. Okay. Anything else?
So you guys were talking about the contributions, right, from another person. It could be a family member, it could be a friend or somebody.
Ideally, we like family members, but if it's a friend, you know, I look at the whole picture. Like, here's a good example for one. I had this lady, she lived out in Ottawa. This was a couple of years ago, and she was single. And she had 2 parents, of course, but they were divorced. One was living here and one was over there. And I think dad was giving her 1,000, mom was kicking in 300. She had 2 students renting rooms in her house. Now, normally, no, we don't look at student rentals at all. But this one, she could actually prove she was getting money from the university for room and board. So it's like, okay, she was in a high interest mortgage. She had credit cards. She didn't work, right? And so what I did was, I took her mortgage, I took all her debt, I used the income from her parents, the school income, got her qualified, sent her to school for a year and say, good luck to you, come back and go into an A lender, and that's what she did. Right, so, and the broker was stunned that I could do that, but see, this is where I can see different things sometimes, and that's when I'll come back to you and say, okay. This is what you're looking at. So also don't worry about, some companies will have, you know, they'll only allow you to have so many declines and then they say, okay, we're fed up with you per se, right? We're not like that. at all, because once you get into the swing of the business we're looking for, it's pretty easy type of thing, but we don't hold those numbers or ratios over you, because it's ridiculous. I mean, and especially being new, how are you gonna learn? Right, that type of thing.
Making
So-
mistakes.
Well, there's not a mistake that can't be fixed.
Yeah.
And there's no such thing as a silly question, like there really isn't, right? And when you keep that in mind, it gives you that comfort level, which you're okay with.
So I'm gonna be pushing, I plan on actually eventually holding seminars with employers and stuff to doing, a lot of co-owner occupied.
Yeah,
What are your thoughts on that? Like how to
to get,
structure those or present them?
well, if you can get into the companies, right, that's gonna be your biggest task there. Have you been able to get into one yet?
No, but even just generally talking to people that don't think that they can afford home ownership, I'm like, no, you're gonna have to double up. If you can stay in a house for 5-6 years and
that's-
then.
Well, I would start definitely with their down payment if it's gonna be purchased, like definitely, like, where were they starting from with that, right?
It's not necessarily but that, just how like is your company good with that type of thing? So say if two brothers wanted to get into a house or whatever, yeah, it's not like an
Yeah.
issue
No,
for you, or to have a house and then do a construction loan on top just to separate it
we
if
won't
legally?
do, no, we
No?
won't do construction financing.
Not like for new construction, but
Right.
like say,
There-
Renovation, you mean,
and it,
inside the
just,
renovation?
yeah, inside renovation, just to separate
Clean
a
and-
place or to
yeah.
make
Make a semi-detached out of a detached kind of.
no, not,
No, you couldn't
no,
do that, because
like,
then you're changing
in-law
the
suite.
whole thing.
in-law suite is
Yeah,
big.
I wanted an in-law suite, like, we don't have an issue with that, right? So let's just say, they wanted 50,000 to do the basement per se. We would take a look at that, and with something like that, it'd probably be okay. Do you have any contracts, right? And do we wanna hold back money on that? But
Yeah.
I've done some of those
Okay,
as well.
well, I just see that that's gonna be the future for the next few years.
very
And that's what I'm going to
Yeah.
be
And even.
instructing a lot of
Yeah, and
people
even
to
if you
do.
have one of those and you wanna run it by me, absolutely, right? So, definitely area, credit, what is it? And it's the same thing, the area, the LTV we're looking at, stated verifiable income. And because each deal truly is different, especially on the B side, because, this person could have this issue, that one might not be able to do this, so they're always different. Right, and that's where the common sense really comes into play. So the better you know your client, the better it is, because then we know what we're working with. I mean, I've had clients on the books. And one of them called me direct and, she wanted to do a refi. I said, sure, and I did her credit. I said, what are you still doing here? You should be an A lender. And she goes, really? I said, yeah. Yeah, so, and that's what I do too. I refer things out. I picked one of my brokers who was good to me. I said, hey, can you look after this one, get her into an A lender.
Well, I have a friend who's a real estate agent and she got roped in with a bad broker who kept her in a private when she should have been able to get into a B.
Yeah.
And the only reason she didn't sue him is because it's small town and real estate industry, so just the controversy would be.
Oh,
But cost her like 30-40 grand.
like, no, right? Like, it's terrible like that, and there's no need for it, right? But I've done things like that, right? And I know people will do second mortgages, so, we don't do seconds, right? Generally, we don't even like seconds behind our first, but we can make the odd exception depending on the deal, right? But I think out of all our products we've got, we should be able to find a fit somewhere for most of them anyhow. Okay? Any other questions? You good?
I'm good.
You
Yeah,
good?
that's.
So the ones with T4s, like the people on payroll are the easiest to handle, is that good?
No, for me, no. I mean, yourself, yeah, I mean, you got a regular job, I mean, hey, that's fine, right? But no, you know what, I do just as many stated as I do verified. I do people that have credits in the 800s, and I've done them in as low as the 4s, right? Every situation can be different, so it's not, one really doesn't make it better than
Oh.
the other.
TransUnion or Equifax?
Equifax,
Do you accept trans?
we'll look at it, but no, we'll still go with Equifax, definitely. Okay,
I told them must be 90% of the ignorance.
Yeah. Like I had a really great score on my TransUnion.
but not on the
my-
Equifax,
Well, it's coming up on my Equifax,
Yeah.
I'm working
Because
on it, but it's,
yeah, no, I know they can be different, right, but we use the Equifax.
TransUnion 6 months late every time, you know, the Equifax affected every month. But TransUnion they take by 6 months, 6 months. So 6 months late, that's why sometimes the good credit when you have, but the bank just only, when you have a problem for the Equifax, like something happening, right, that time exception to go to TransUnion.
well, I don't know if that's true anymore, because BMO runs TransUnion.
But they use it to both,
Oh,
yeah, Equifax.
Yeah, some companies will do both.
Yeah.
Yeah, I mean, I worked at
IBC,
lenders way
BMO,
back when,
yeah,
and they
IBC,
do
BMO.
both.
TD only Equifax, you know,
Scotia
Yeah.
uses TransUnion.
yeah.
Some do, yeah. Okay,
So should we recommend our clients to have a Equifax account and maybe,
Well, we
keep an eye on their, credit scores, or should we not?
Well, you
As a
should always
general
be doing that
practice.
as far as I'm.
You should have, it's only to buy
Regardless,
the
whatever.
Biologics, yeah,
you can using the biologics.
just use Biologics.
Okay,
You
because
don't, you don't have to submit under, anybody can submit under your own name, all you need to do is put it to my attention.
okay.
Okay, and, do you guys have business cards yet?
Yeah.
Why don't you
Just
give-
that.
Why don't you give me one of those, and this way I can get you set up,
Set up
get
on
your
there.
rates and
Sure,
everything, if
sure.
you want, you can just email.
That's
me.
right, that's right.
And then that way you'll be getting, you'll get those on a regular basis as
Well, you're
well.
gonna get a stamp.
You can get the old, new agent, the.
Super.
You can store the, might be, the loans I give to the our, the register,
Yeah.
register, agent.
Okay,
Should be, so 15 is coming and more, we waiting for the visa, the waiting list.
okay.
Is they are pending, something like that. So whenever, we ready, we're gonna be submitting the, X out to our agent to the list, and then address, phone number.
Perfect.
Yeah, so you don't like give it to you.
Yeah, no, that'll be great. We'll get that all put
Sure,
together.
sure.
Wonderful. Oh, that sounds great.
Yeah, most to be submit agent to the my name,
Yeah,
because I'm principal broker,
right.
right, so I just leave you the file, everything, and then whatever, I just note to, someone, the agent, maybe you directly contact them.
Yeah.
And discuss about the deal.
That's perfect.
Okay.
Yeah, that's
Okay.
easy.
Yeah.
No problem there, absolutely. Okay,
Quick questions.
no.
No, no,
So refis, we hold the rate for 60 days, purchases 90. No pre-approvals, no bridge financing. Okay,